Welcome back, everyone. We've been working our way through the fund development planning process, and the first part of that process is to evaluate your current fund development operation. This segment will conclude that step as I walk you through how to evaluate your corporate giving, foundation giving, and governmental relations fundraising channels. First, I want to briefly explain what I mean when I talk about these different types of giving channels. As we covered in the last segment, corporate giving refers to fundraising activities aimed at for-profit businesses. This can refer to small local businesses or large multi-billion-dollar corporations and everything in between. Of course, there's major differences from one end of the spectrum to the other, which I won't be covering in this brief segment. Businesses give based on their own philanthropic priorities and/or the philanthropic priorities of their employees. When companies choose where to give their philanthropic contributions, they'll usually give in the form of grants or sponsorships. They may also give gifts in kind. Sometimes they'll give outright gifts. The process for where and how they give is entirely based on the individual companies. In other cases, companies give money based on where their employees give their time and money. Some companies offer matching gifts to their employees. When an employee makes a charitable gift to a nonprofit, the company will give a corresponding amount to the same nonprofit. Usually it's a 1-to-1 ratio, but some companies, like ExxonMobil, match their employees' contributions at 3-to-1 ratio up to a certain amount. Volunteerism grants are similar to matching gifts, except the company will make a gift based on the amount of time that their employees dedicate to nonprofits rather than the amount of money. In this segment, we're not going to talk about matching gifts or volunteerism grants because those fundraising efforts are focused on individual prospects, not the companies. Foundation giving can be similar to corporate giving fundraising, which is why some nonprofits combine the two. There are two main types of foundations: public or community foundations and private foundations. Public or community foundations are grant-making charities who raise money and then allocate it based on their mission. For example, if the mission of the foundation is to decrease poverty in a specific county, they will disperse funds to deserving nonprofits who will help further that mission in the county. These foundations give exclusively in the form of grants. Private charitable foundations, on the other hand, can be set up by companies or individuals. Some businesses have affiliated foundations who make gifts on their behalf. Foundations are governed by different regulations and tax codes, which is why they can be beneficial for charitably inclined companies and individuals. While they operate as separate legal entities, they maintain close ties to their parent company, and their giving will reflect the needs of that company. Individuals can set up charitable family foundations as well. This is an independent legal entity set up exclusively for charitable purposes. The foundation is funded and controlled by a designated person or persons, so there isn't the same bureaucracy as with other foundations. The gifts or grants given by family foundations will be based on the decisions of the individuals who fund and control the foundation. Lastly, nonprofits can solicit funds from governmental organizations or agencies. Giving from governmental agencies always comes in the form of a grant. It's a bureaucratic process that often involves no meaningful human contact. Many nonprofits separate their governmental relations programs from their fundraising efforts because government agencies aren't truly philanthropic prospects. Now that you understand what corporate, foundation, and governmental prospects are, I want to briefly explain the two main differences between the three. The main differences are in their motivations for giving and the process for soliciting funds from them. You need to understand these differences before evaluating each giving channel. The motivations for corporations vary based on the size and complexity of the business you're targeting. If you're targeting a small local business, the motivations for giving will likely be those of the owner. For larger companies where the financial contributions aren't dictated by just a couple of individuals, the motivations are different. Businesses usually give because they want something in return. This doesn't mean that they aren't charitably inclined. It just means that they need to be able to justify giving away their profits. Smaller companies don't have to defend their decisions to investors. Some of the things that businesses get in return for their contributions are public recognition, visibility in the community, and brand recognition. They justify the gifts to their investors by saying that the recognition or visibility will help to increase their profits. For example, Campbell's Soup may give to the American Heart Association in exchange for recognition in hopes that people who support the American Heart Association will see their name and will buy more heart-healthy Campbell's Soup. Larger companies may also make philanthropic contributions to help them to invest in their future. For example, if a long-term goal of a company is to expand their work in biotechnology, they may fund programs that get high school students interested in studying biotech. Corporations may also partner with research universities or other institutions on solving large-scale problems. In other words, a company will provide funds to an organization for them to carry out research that will ultimately benefit the company. While this is a type of giving, it almost never is considered part of the fundraising operation. The solicitation process for securing funds from companies varies based on the company. With small businesses that are governed by a couple of people, you will usually treat the solicitation process the same as you would if it was an individual. The difference will be how you motivate them to give, but the process is mainly the same. Bigger businesses sometimes give through grants, which organizations must apply for. Other times they give outright gifts, but I find that companies don't give just because you submit a grant proposal. They want to be engaged, which means that you still need to qualify, cultivate, solicit, and steward them. The process will be different from the solicitation process for individuals because companies will have numerous entities involved in the process. The motivations for foundations can be similar to those of corporate prospects, which is why the fundraising efforts are sometimes combined. But there's a couple of main differences. First, they have to give away a certain amount each year based on IRS rules. It's just a matter of who they give to and how they'll divide up their donations. Second, public foundations have designated missions, and the gifts that they give are in service to that mission. Similarly, private foundations give based on the philanthropic priorities of their founders. While the giving motivations of public and private foundations are similar, the processes for soliciting those funds are different. Public foundations give almost exclusively through grants, and there are usually specified parameters for the grant proposals. Depending on the size of the foundation, the standards and process may be more relaxed for smaller community foundations. Personal relationships still play a role with public foundations, which is why you still need to identify, qualify, cultivate, solicit, and steward the board and the staff of these foundations. On the other hand, you'll usually work with private family foundations when you first have a relationship with an individual affiliated with it. For that reason, most nonprofits will treat this type of foundation giving the same way as individual giving. They'll identify, qualify, cultivate, solicit, and steward the individuals the same as any other. The only difference will be the name on the check. Corporate foundation fundraising is usually treated the same way as corporate fundraising, except that you involve the foundation staff in the fundraising process. You want to make sure that you have relationships with staff from the company and from the affiliated foundation. Governmental agencies give grants to nonprofits for several reasons. Now, I won't be going into the concepts of government failure and market failure in this series, but I encourage you to read about these concepts if you're considering applying for government funds. For the purpose of this segment, what you need to know about their motivations is that the United States government doesn't have the resources to carry out the wide range of social welfare programs needed by its people, which is why nonprofits pick up the slack. It's more efficient and cheaper for the government to grant nonprofit agencies funds to carry out programs that they feel will support their agency's missions. Like I mentioned, governmental relations programs are often separated from typical fundraising efforts because they're very different from each other. The process for applying for a grant from a governmental agency is rigid and it's bureaucratic, so there's no wiggle room. You just have to follow the proposal instructions and make the most compelling case for support that you possibly can in your grant proposal. Okay, now that you have at least a basic understanding of corporate, foundation, and governmental fund development, let's talk about how you evaluate each of these channels. The evaluation metrics are usually very similar to the evaluation metrics for the major giving channel. You should collect the following for each of the 3 giving channels: number of prospects identified, number of gift or grant opportunities identified, number of gift or grant proposals submitted, total amount requested, total number of gifts awarded, amount that's awarded, and percent of prospects retained. Just like with major giving, you should also measure prospect stage movements and gift proposal tracking. These metrics help you to identify where your strengths and weaknesses lie. Remember that the fundraising cycle consists of 5 stages: identification, qualification, cultivation, solicitation, and stewardship. Let's look at an example of corporate and public foundation giving for a nonprofit. I'm not including private foundations or government agency prospects in this example, since fundraising efforts from them are usually combined or separated with another giving channel. The first metric, number of new prospects, measures the success of your identification phase. Corporate and foundation identification can be conducted through personal efforts, such as an introduction through a volunteer, but more often it'll be done through research efforts. There are many databases and resources that nonprofits use to identify corporate and foundation prospects. You don't have to look too hard to find government funding prospects, as the information is housed on government websites. As you can see here in this example, there are a total of 190 corporate and foundation prospects, of which 110 are newly identified this year. Based on this metric, I can see that the nonprofit has definitely invested resources in public foundation identification. The corporate prospect base looks relatively small, but 20% of their total prospects are newly identified, which is a good sign. If you recall from our overview, we know that this nonprofit has 10,000 individual prospects. 190 non-individual prospects is comparatively very small. This tells me that the nonprofit may not have focused on corporate and foundation fundraising previously, and have only recently launched fundraising efforts for them. I would also venture to guess that the nonprofit doesn't have a staff member specifically assigned to this area, but it looks as if they're hoping to expand corporate and foundation fundraising efforts. The next metric, number of gift or grant opportunities identified this year, is a metric that helps you to realize how effective your qualification is. The qualification process for these channels is a bit different than it is for individuals, but ultimately you're still looking to qualify capacity and inclination. Again, for corporate, foundation, and government prospects, research is key in the qualification process. Effective research will help you to prioritize your prospects based on the likelihood of them funding you. Notice that a large amount of gift or grant opportunities are being identified compared to the total number of prospects. This tells me that there's possibly something wrong with the qualification process. When you look at your prospect base for funding opportunities, you should only identify those opportunities where you stand a good chance of applying for funding and securing the funding this year. It's very unlikely that you would target nearly 80% of your prospect base in 1 year. Just like with the major giving channel, you'll have prospects in different stages of the fundraising cycle at any point in time. The next metric, number of gift or grant proposals submitted this year, can help you analyze the effectiveness of your cultivation strategies. You shouldn't be soliciting gifts or grants from corporate, foundation, or government prospects without at least some cultivation. In the case of governmental agencies, you won't have much of an opportunity to cultivate, but you should at least have a contact person who can answer your questions before submitting a proposal. Corporate and foundations need to be thoroughly cultivated before you ask them for money. The biggest mistake I see nonprofits make is when they use a proposal or solicitation as their first or only form of communication with a prospect. In this example, 100% of the identified corporate opportunities were submitted for solicitation this year. This could indicate that maybe the nonprofit did a perfect job getting all 40 prospects qualified and cultivated. More likely, it means that the nonprofit didn't have time to adequately qualify and cultivate, so they submitted fund requests for all of the identified prospects. The nonprofit only submitted requests for about 25% of the identified foundation opportunities. This points to there being a problem with the qualification process. It also raises some questions about how the nonprofit is conducting qualification and cultivation. Ultimately, more information is needed in order to determine where the bottlenecks are. This leads us to the next metrics, which measure the effectiveness of your solicitations or grant proposals. As you can see, only 50% of corporate requests are being funded, while 80% of foundation requests are being funded. The foundation statistic is actually pretty good, so let's focus on what's going wrong with the corporate funding proposals. There are a number of reasons that your request for funds wouldn't be granted. Ultimately, it comes down to the fact that one or more stages of the fundraising cycle weren't effective. It may be that the organization or funding opportunity just isn't in alignment with the prospect's goals and priorities. These prospects and opportunities should have been weeded out during the identification and qualification processes. Another reason you may not be getting funded is because of lack of cultivation. As I mentioned, the proposal shouldn't be the first time a funder hears about you. Another problem I see is with nonprofits not personally engaging their corporate and foundation prospects. I've talked to nonprofit staff who are afraid to reach out to funders because they think that funders are overwhelmed by funding requests and that they're better off just following the instructions for submitting a request. This is wrong. Foundations exist to give away money, so it's not a bother for you to reach out to them. If they tell you that they're not interested in your organization or your project, that's actually a blessing. It means that you don't need to dedicate additional time or resources on that prospect. Cultivation is more than just a meeting. You need to show potential funders what your organization does and how you can help them to achieve their missions. You should be inviting them to your events, sending them information on your accomplishments, and having them meet with people affiliated with your nonprofit. Sometimes your funding requests are granted or not granted simply because of the actual solicitation. Perhaps you asked for too much or didn't pitch it the right way. More often, though, I see that grant proposals were poorly written or didn't follow the funder's guidelines, and that's why they weren't funded. The last metric, retention rate, will tell you how effective your stewardship is. The fact that only 50% of this nonprofit's funders give again is an indication that there's a big problem with the stewardship process. I see nonprofits often fail to steward their prospects after they're granted funds. This is a huge mistake and will guarantee that you don't get funding from those organizations again. For governmental agencies, they outline the type of stewardship they need. It's rigid, like the rest of the process, and requires you to submit proof of funds being spent appropriately. They also want to see the quantitative and qualitative outcomes of how their funds were spent. For corporate and foundation prospects, your stewardship will be a bit different. If the funder requires you to provide follow-up information on the awarded funds or projects, you absolutely need to do it. But you should also be making the companies and foundations feel appreciated and recognized for their support. This example is only a partial analysis, and more information would be needed to determine the strengths and weaknesses of this nonprofit's corporate and foundation fundraising channels. In addition to gathering more data, this nonprofit would be smart to talk with their prospective and current funders to find out what's working, what isn't, and what they can do better. I hope this information is helpful to you as you analyze your own corporate, foundation, and government fund development channels. Please email me if you have any questions. In my next segment, we'll move on to the next step of the fund development planning process. Thanks again for tuning in.